Hello everyone, hello Shakthi, and here we are, again, talking about StocksDojo, our platform we are building to analyze stocks. And we got a request to talk about some oil company, ExxonMobil. I don't know that much about oil, but I will ask an expert, maybe not in oil, but in stocks.
Yeah,
Shakti,
thanks,
for
Natalia.
me, you know everything, so please
Yeah,
tell me what do you know about this company?
okay. A little bit of background on why I'm interested in ExxonMobil. So, during the COVID crash, oil prices dropped significantly, and the stock crashed to $30 or so. And at that point, the dividend yield was almost 10%. And as a dividend investor, that was a great opportunity to jump in. But for whatever reason, I didn't do that. I regret it now, but I still have it in my portfolio today. Okay. So what is ExxonMobil, right? Most of us know it's a oil giant in the US, and they have multiple operations. Upstream, which means exploring and producing oil and natural gas. Midstream is transporting energy through pipelines and terminals. And downstream is refining the crude oil into fuels, lubricants, and chemicals, and so on. When it comes to retail, Exxon branded gas stations are seen everywhere, probably around the world, right? So it's not just gasoline. Exxon is a major player in chemicals and plastics also, and they have invested billions in carbon capture, low carbon fuels, etc., because they want a future strategy which will try to address climate change. Since it's an oil company, there is always a negative sentiment around oil when we think about climate change. But Exxon is trying to address that issue and plan a strategy which works for the future. So Exxon pulled in a lot of revenue recently, up to $330 billion. And their financial health is pretty decent, strong free cash flow. The dividend yield is still at a good rate. That's why I recently put some money into Exxon. Is Exxon fairly valued? Well, let's take a look at our StocksDojo app to figure out some numbers.
Yes.
Our fair value estimate in our fair value estimate calculator, which is interactive for the user, is currently at 58 based on the assumptions from recent financials. So in the recent financials, if I go here and look at the income statement for your reference, the company's revenue has not been growing well in the last 2 years. So we have set the growth rate as zero, but it doesn't mean that you should also assume that it will be zero in the future. Most of the analysis that we do is also based on how the company would perform in the future. So if you look at the text here, we have calculated the growth rate at which this company should grow in the next 5 years with an 8% discount rate, which is the minimum expected return from such companies. And if you re-estimate that, you will see the company's fair value going up to almost 103, and that's pretty close to the current stock price. So if you believe that Exxon will grow at least 1% for the next 5 years, and if you're happy with making 8% returns from this company, it's actually trading at a fair value. And one of the main reasons for investors to invest in Exxon is the dividends. And we have a dividend adjusted chart here, which also includes the dividends when you look at the growth, which is something you won't find in other applications. So as you see in the last 5 years, it has done extremely well. And after the COVID crash, it has done even better, right? And if I look at the dividends, which is my favorite part, ExxonMobil has been growing its dividends pretty much every year. It's always positive. Some years the dividend growth is not that high, but they somehow managed to maintain a decent positive dividend growth. And the current yield is 3.6%, which is awesome, right? And these are the reasons why I think Exxon could be a good buy if you are interested in it. It's not investment advice. It's just that what we did. So we did buy some ExxonMobil recently. Okay, go on. Do you have any questions, Natalia?
Yes, I do. Maybe it's not a question, rather a comment. If we go back to fair value estimate page,
Mm-hmm.
I really, really like that note that company needs to grow at around growth rate 1% and terminal growth of 1% to justify current share price. It is helps to understand how feasible it is. Sometimes
Yeah,
you see companies have to grow at like 50%
yeah,
annually. In this case, it is quite reasonable.
reasonable. Yeah. We just hope that oil prices don't go down. That's it.
Yeah, yeah, that's right. That's right. Well, thank you, Shakti. And I would bring little bit of ESG component because
Okay, there you go.
this is oil. And there might be a lot of criticism, but they do have positives. So, ESG actions and initiatives which are positive. Major investment in low carbon solution. I guess they don't really have much choice. Low emission technology by 2030. They have invested $30 billion in low emission technology, focus on areas carbon capture, hydrogen, biofuel, and lithium extraction, recycling, and circular economy efforts. So, from my understanding, this company just has so much money, and right now they're just chucking in all these green initiatives. One is constructing 1.5 gigawatt natural gas plant to power data centers, intending to capture 90% of CO2 emissions.
Hmm.
Environmental disasters. 1989, no one has forgot that. Climate change, denial legacy, then suppression of shareholder climate proposals. Okay, so they have some resistance to external ESG pressures, human rights violations. So okay, I understand with there's all these climate guys, but what's here? I don't know. That's human rights abuses. Mixed ESG risk profile. Sustainalytics classify ExxonMobil as high ESG risk and average management, reflecting heavy exposure and moderate response readiness. MSCI rating, it is triple B. I would say that there are more concerns for the company than positives. Even they're trying and spending a lot of money on doing better.
Uh, yeah, I understand because that's the industry, right? So they are in an industry which is the polar opposite to climate action, right? Everybody wants to move to renewable energy, and they rely on oil for most of their revenue. So green energy is something that they are working on. They are also investing in a lot of green energy initiatives. So we need to wait and see how the company proceeds in the future and how much they are dependent on oil, and if they can diversify and move into other areas with the amount of money that they have. There have been negatives in the past, but since they are all public, I believe the company is working towards cleaning up all those issues from the past and showing a better future. Yeah. What do you think about the rating?
He
All
submit.
good. Okay, let's submit. Okay, so environment score of 51, social of 51, and governance of 58. Well, it's not too bad from based on our perception, but it's right at the bottom, right? So there's a lot of scope for improvement for this company.
Thank you, Shakti. Uh, it was great as usual, and we will talk next time about other companies. And I'm looking forward to see you very soon. And yeah, that's all.